Good morning, everyone. Happy Thursday. What's up, Jiraj? Ian, Carnivore Kid, Harris, how are you? Good, good, good. Hey, Rasto. Hey, Joe. Jiraj, what's going on? Coming into the last days of this year. Hey, Travis. How's things? You working up north? Well, let's see what we've got this morning. As they say in Canada, we got a real dog's breakfast here. Hey, Badir, how are you? Couple more days before the holidays. So, I'm going to talk a little bit about time frames this morning, and hopefully that will help you guys. We are quite honestly at a place, and the reason I posted that chart earlier in the room and asked you guys to look at it and tear it apart. When I posted that chart, what I'm looking for, and all very good observations, right? So, whoever commented on it, what did Carnivore see? He said, I see gap fill in top of cost basis, and everybody's starting to see cost basis, right? And the chart that I pulled up was this thing here. And I'm looking, and we're right here at this level. And right around here, you have these big rotations here and here. The point of this is we don't know if we're going to get back in here or we're going to bounce and do this. Now, everyone is expecting that Santa rally, right? And generally, in this business, when everybody expects something, things tend to go the other way, right? Now, I'm not saying that is a trade scenario, right? That's an observation, right? Generally, when everybody's expecting this thing to go right, it goes left. Or everybody says it's going to go up, it goes down, and vice versa. So the main thing is, and my sort of message for the day is because this is not entirely clear, right? Like if you were trying to plan a trade scenario around this as a larger size trader, right? You would sit and you'd go, holy crap, there's a ton of inventory above 67, 60. Look at all this. How much of that is going to retain and how much of that is coming out, right? So you don't know if there's downside, upside. Maybe you'll look below and fail would be the trade that you took. And if we accept under 60, you could see that there's not a lot of trading range here. See, this is a trading range. So what I mean by that is if we were trading up here and we came back, we'd find support in this area because there's time and volume, right? There's position, right? Position. Here that's really, really big, right? So when that happens, you don't want to be guessing when the range is like 160 points as a larger trader. So what you want to do is you want to use our smaller time frame charts to trade this thing cautiously while the larger traders work out their issues. Morning everyone on YouTube. Does that make sense? The nice thing about being a retail trader is that you guys aren't position long 5,000 contracts figuring out what to do with it, right? You can get in and out of the market, you can manage your risk, and if things aren't going well, you can bail, right? Everybody with me? Yes? No? Right? Maybe? Okay. Right? That's the point of all of this because the way it's trading right now, I if this was a normal market where we had supply that freely fell out, we would have already been down here in this 6650 area, right? But because there are so many people trapped short from this move at 65.97, the market every day is in price discovery lower. When the market is in price discovery, and excuse my language, it is an absolute pain in the ass to trade because there's no support, right? The support in a market like this, okay, in Vancouver, there was a guy called BP, and he did a deal, and it was a gene therapy deal, and he squeezed everybody on the street, right? And everybody was shorting the stock at $3. He took it to $20, $30, right? Which was at the time was inconvenient. A lot of brokerage firms were under capital. They were shorting it, and he was just controlling this thing like a puppet. The problem is when you trap people short, right? When you trap people short, when the thing comes apart, the only bids you have down here is the short cover. So this zone here from 66.56 to 69.64, right? Wrong language, Harris. Brother, hey, Malaka, you're writing in Greek. We can't understand what you're saying in the room. So it's a look above and fail of 69.64, right? Where's the target? Well, the middle of the zone is 68.10. We're underneath the middle of the zone, right? Next target, 67.33, and then all the way down here at 66.58. What I'm trying to do is prepare you guys over the next couple of days going into Christmas. Now, Christmas Day is off. The day before Christmas is a half day, right? So for my larger traders out there, right, who will be watching this when they wake up, hopefully, don't get overextended on longs right now. Be careful if you're longs, right? Because all of the inventory is above us and there's no support at all in this market other than the support from the bids from the shorts who are trying to cover before the end of the year. What did I tell you guys that was going to happen that is a distinct possibility? We could get some serious volatility going into the end of the year. And if that we start losing bids at 67.60, 67.50, don't be surprised if we just do like one of these big drops. Okay? Because people have already marked to market a lot of their positions, right? So be careful, right? If you're a retail trader, this gives you opportunity because you realize What else does this tell you? As a retail trader who's been doing the look below and fail all year. Should I play the music from Jeopardy? Come on, guys. When inventory is above you and there's no clear support. Come on, come on. I'm gonna drag it out of you guys. Someone's gonna. Come on. How many people are watching? Come on, Moran. Moran's gonna have it. So you're a look below fail trader. There's no clear levels of support underneath us. It's a new contract. All the inventory is above us. Do, 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 do. Come on. I want you to think about trading right now, right? You trade the look below and fail, right? What, as a trader, should you be aware of in this situation? You've been doing the look below and fail all year, right? Now inventory's above you. Let's me ask another question. Is the look below and fail going to be a great trade? Are you going to have huge results when everyone's selling? Okay. Whew. Feels like I'm doing a root canal, right? Well, what you want to do is you got to manage your expectations when you're going long, okay? Yesterday, I put a chart on there, you guys, and I used a 30-second chart to show you. There's a seller at 67, 95, 94 all day. Look how long there's been a seller at this level. We're just starting to creep up above it now. And the next place there's going to be a seller is 6,800. So if you're a look below and fail trader, right? There you go, Travis. Now we're cooking with gas. Travis got the right answer. When supply is above us, the look below and fail is much less effective. Sellers have to compete. So now is a great time for you to sit back and watch and learn how to short sell, right? Now, having said that, we've been under 67.95 now since last night. These are 30-second candles. So over here and over here and over here, we haven't been above that area for a while, for very long. This is the longest period of time we've been over 67.95. So we might get a move up just because we have so much position underneath 67.95, right? Remember? Accumulation distribution? I know it's early in the morning and you guys haven't had your coffee, but when you rewind this and you're awake, I want you to think about this, because what I get a lot at this time of year is I get people going, they're trying to pay their Christmas bills with the market, and if they don't understand what's going on, you're going to lose all your money. because you're going to be buying the dip and buying the dip and it's not going to go higher. And then you're going to buy more and it's going to go lower. And you're going to buy more and then you're going to get margined out. Okay? So be aware that there are sellers. Mark the areas where the sellers are. Okay? So you're aware of it. Right? If you're a short seller, but this is the other thing. Now let's go and put these candles on a 1 minute. Right? If I go and put these candles on a 1 minute, 5 minute, whatever, you could see that if you're taking shorts off of a level, say you're shorting, right? Say you go, okay, I see a seller here, right? At 67, 87 and a half. Be aware that they stop selling here. Does this seem familiar? So you really have to short that down or buy that up. Okay? Right? These trades here are going to be harder because it's going to go chop, size orders come in, and then chop for hours. That could be the scenario, right? And then when RTH opens, you get some extra order flow in there, and everything goes buck wild, and we get big downside liquidation, right? This profile that we have tonight, this is a short covering profile, right? It is not a B profile in market profile. So don't think that they're putting a position together, right? You might get a temporary move back up, but somewhere along here you are going to find sellers because everybody above 67.95 is long and trapped. And if you don't know what a trapped long is, right? Go stick your head in a bucket of water and try and breathe. That's what it means to be trapped long or trapped short. Okay? When traders are trapped, it means that they are in a position that is not profitable. Hey, Raj, what's up? Yeah, buyers don't defend price, Mahindra. Just so you know, that's the quickest way to go poor. That is a complete fallacy. Buyers don't defend price. That's how you lose all your money. Price is defended when sellers stop selling. And lift the offer. And I'm glad that you mentioned that because that is a huge fallacy in markets that buyers defend price. They don't do that. I know because I've been a large buyer and a large seller my whole life. Right? The easiest way to lose money is to try and defend the price of something. People will sell the hell into you and you will go bankrupt. I know someone who lost over $120 million trying to defend price. So, just so you know. Yeah, that buyers defending price is one of the biggest old wives' tales in the market, and it's completely based on fantasy. Cheery, what's going on, man? How are you doing? Good morning. So let's go see what we've got. I've got balance zones done up. Oh, good stuff. Good to see you. So let's see what we can do today. We're going to trade the 1 minute chart as usual. Quelle surprise, right? Now, I want to prep you that it's going to be annoying. Okay? It's going to be an annoying. The next couple of days are going to be annoying. That's basically what this whole preamble was, right? To let you guys know that it's going to be annoying trading until pretty much I would guess the new year or until after Christmas, right? So I've set VWAP, and why it's going to be annoying is this. Look, it goes sideways, and then you get a move, and then it goes sideways again, right? How do we trade this? Well, you're going to be doing a lot of sitting. So I do highly recommend doing some Christmas shopping because there are going to be times where it's going to be horrible. And I'm just telling you that so you guys manage your expectations so you're not stuck in trades for hours that aren't going anywhere, you know. Now, we have upper stops in this market. There's going to be some major stops here, just under 98. We were under there, look, that 95, 96, right? We've been under that level for hours. So if we can take this momentarily and go do this, your upper targets are 6,800. Remember, there's a seller there, and then there's going to be sellers at 14. So that's, if we could take this and we can go and sell it up here, then the people who had to buy it and hold it, wholesalers, they might be able to get rid of supply. But I'm telling you from looking at the 1 minute chart that they are selling right here currently. Do you see that? I want to show you the difference between expectation and what's actually happening. Right? The expectation is that you take that inventory under 67.97 and go sell it up at 6,800. The reality is, right, on a smaller time frame, the 67.85 inventory, which we have in the blue zone, is being sold at 93. It's being sold before 6,800. Anyone? You guys with me? Yes? No? Questions? Comments? Okay. Yeah, they're selling right here, right? You could see them selling. And people will go, JJ, how do you know they're selling? Well, they were buying here. This is distribution. The main difference between chop and rotation that we can trade is the size of the range and the nature of the order flow, Joe, right? When it's choppy, when you have a 2 point chop, unless you're a market maker with algos and size, it's hard to make. See, if I was a market maker, Joe, between 92 and 94, there's like 50 grand worth of money in there, 100 grand. Where if I run 1,000 contracts through one tick, that's $12,500, right? If I run 5,000 contracts from between 92 and 94, right, and I sell two for every one I buy, I can make a couple of 100 grand. You guys can't. So when you see the chop with very, very tight range like this, it means it's not worth it. Does that make sense? Like, this is more tradable because you can buy 87, 88 and sell 92. This this is wholesale business. This is retail business. And as soon as you see those candles, I know you guys aren't used to seeing this, right? That's why I drone on and on and on and on and on about this all the time, right? Because I want you guys to understand as soon as you look at a chart, you can go, okay, I got to dial in and do some business, or you can go, I can relax. As soon as you see candle patterns like this and like this, relax, right? Because even these trades, even though the range here is not bad, it's 83 to 84, you got to buy it, and VWAP is right in the middle. So it's a pain in the ass. It's really choppy, right? This is pretty much impossible to trade unless you've got size, right? So if you've got size, you put 5,000 shares on the bid, 5,000 shares on the offer, and then let the idiots bang around in between your bid and offer. That's what size traders do, right? So right there, that range is the pickpocket market, right? That's when they go, okay, only idiots and suckers are going to be trying to trade this. Let's take advantage. We'll put 5,000 on the bid, 5,000 on the offer, and then we'll just let them bang around and we'll just take everybody's money. Make sense? So you want to avoid that, right? We see that and they're like, nah, right? So let me put it into another way that people will understand. Trading this is like walking down a dark alley in a really bad area of town. You are going to get mugged, right? Just so you know. Now, London's opening. Let's see if they can do anything. London's opening now. Good, good, good. If long-term inventory gets too short and there's a correction higher, potentially up to the single prints, there's a big set of single prints up here. That could happen, right? The thing is, Jiraj, they're already distributing. You got to understand that underneath 68.21, there is a crap ton of product. It's like you and your pop have so many, you know, pairs of shoes that you're going to unload them as soon as you can, right? Hey, JM, how you doing? Welcome to the stream. So what do I see in the charts? I see inventory and cost basis. And how do I trade? I trade inventory and cost basis and order flow. So the trades I love, if you're looking at this 1 minute chart, the trade I really like is called the look below and fail trade. When the market looks below one of these colored levels into another one and pops back up. So what I do is I put my buy order here, I put my stop here, and then I look to sell on the way up, and the target is the top of the zone. This is called rotation. Another trade I like is the look above and fail. You look above a level, you short underneath, you put your stop at the top of that candle, and you cover at the bottom. My trades are based on the business. I've been in the business 34 years. I've taken companies public, 200 of them, and market making, deal flow, all of that stuff I've done. So a little bit different than most people who do this. I'm a size trader. I'm a size distributor, right? And my old job was distributing stock for the insiders to you guys, right? So selling billions and billions of shares into the market. So I have a different perspective, right? So what I try to do in this channel and in our trading room, which is the tradingsyndicate.org, what I try and do is I try and teach you guys how to trade with something called common sense and good business habits. Inventory, great question. What is inventory? Inventory, so you know this is a market, right? We're getting some correction down. Look for 67.90. If you're short, your stop should be 94, right? Put some bids down here at 90. I'd go 90 and a quarter bid, see if you can get tapped. 67.88, remember, and 3/4 is a big level. I'm curious to see what kind of reaction, if at all, we get any. Let's see. There's the point of control from yesterday. So inventory, right? It's a market, right? So we have an inventory of what we call futures contracts, ES contracts. If you were selling apples, you would have an inventory of apples. What's a cost basis? Well, it's how much you paid for those apples. And then when you sell them, you hopefully sell them at a profit. And that's how business is done, right? Inventory, cost basis. And guess what? If somebody comes along and starts selling a bunch of apples underneath the price you're selling them, you got to price compete and mark it down. That's exactly what's going on now. So London opened, right? New sellers came in. What did I say? 67.90. Look at that. Found the bid. Boom. Now you know that there are bids here and there are bids here. So now you have some information about this range. They stopped selling here because there's a tiny position here. That was the stabilized position that when we came up, it went sideways. That brought in buyers. And this is when the shorts came in and covered. And now the shorts are trapped under 67.90. So I don't use technical indicators. We use VWAP because it's an industry standard, right? Large traders excuse me, they are judged by their execution at VWAP, right? You buy under VWAP, sell over it. That's how the industry works. That's what VWAP is for. It's so that you can judge your trader. If you tell them to work a million share order, do they get you prices under VWAP, over VWAP, right? If he's a seller, you want to sell over VWAP. If you're a buyer, you want to buy under VWAP. So not bad, not bad. We found the bid right there at 90. And how do you find inventory? Well, you can go like this. You can use a 1 minute candle chart. And if I go and I draw a volume profile, just say from the top to the bottom here, you'll see that there's a big cost basis here. I looked at this area here from that top to the liquidation, and I saw that this was our cost basis back and forth between 83 and 87. This green area is 2 times. It's real simple. I like simple, JM. I like simple. I like simple because execution is a pain in the ass, especially in this market. You want to keep your mind free to execute. So if you know that this is, you're up in the profit zone at 2 times, do you really want to be buying it up here? Because what's the probability that it goes 4 times profit? This is where you're looking for a short. This is where you're looking for a long at the deep discount zone, right? So here's your cost basis, 2 times profit, 2 times discount. You look for the look below and fail here, and the look above and fail here. And back rotation to how much we paid for the crap, right? It's simple. Now we just got to make it easy, and that's the hard part, right? The simplicity is not the hard part. The execution is the hard part. And especially as we come into this holiday season, um, they're not making it easy for us. And I told you guys that they were gonna, they were gonna be real peckerheads about this because nobody really wants to do business. All the large traders are gone, right? There's not, everybody is now in pre-Christmas. Next week is Christmas. Next week, most of the large traders will not be sitting at their desks, right? And if you want to know why, go look in the traders lounge. I put in the, you know, what the guy, there's a guy who does comedy. He's hilarious. And, it shows an assistant coming and asking for holidays. And he's like, you want holidays? You don't get holidays, right? And if you need me, I'll be in Aspen. Don't call me. It's a good idea, Badir. You can work on the software. If you have time today, let's take a look. There will be opportunity. I'm not saying don't trade, right? I'm just saying just be a little bit snooty with your money, you know? Don't chase after every price move. Learn to look at a chart, right? A look below and fail. You could buy that, Moran, but we would have had to be in that trade at 91, stop 90, right? And I didn't take it. I didn't catch it. I don't even have my trading account open. I've only got one instance of Sierra running here, which is my demo one, right? So I'll open up the other one. Yeah, you could have bought 91, stop 90. Remember, we did the same thing yesterday. Remember, I was a bit more on the ball yesterday and I took that trade when it liquidated? I bought that, I think it was 89. There was an 89 buyer somewhere and I bought 90, 89 stop and then just sold. Same rules, exactly. Yeah, you got it. You got it. You tend to be a bit more on the ball in these early morning sessions. I think you probably get up earlier than me. So if you're fast enough, definitely. That is tradable. But in all honesty, this morning I am not. I'm okay at looking and watching, but it's going to take me some time to um, get good at execution today. I think I'm going to need more coffee. The other thing, which I failed to mention, unfortunately, I forgot, I'm sorry, is that margin rates are increased tonight, so there's not going to be as many people, and that's why we're not getting as much follow through, right? Because we have economic news, so most of um, the small wirehouses, they've what's our news today? Oh yeah, jobless claims at 8:30. So yeah, and CPI. So yeah, we have less customers in the store. Yeah, it's lifting. Can we bring in some buyers? If we can blow out that 97 stop, we could go tickle 6,800. Still a seller here, my friends. Right? What level is this? 94 half. Oof. It's going to be a long day. Everyone's selling the 94 halves for now. If they see some buyers, come on, let's see if we can pop this thing. Come on, give it the old college try. But you need the buyers, right? And because there's less people in it takes longer to bring buyers in. And this is impossible to trade. Like, how are you going to trade this? I tell you something, if I was log 87, 88 here, I'd be selling, I'd be banging them out with both hands right here. I'd be selling into this like crazy. What is the level you marked at 67.88 on my TPO chart? 67.88 and three quarters. These are larger zones from a longer time frame. These zones were derived in 2020. So the top of that zone is 70.30. The bottom is 67.88. And then that one goes down to 65.47. They were The original balance zone that they were derived from is this 27.49 to 28.10. That was the original balance from 2020. And the levels still work. And the reason why this stuff works is because it's all inventory and cost basis, right? See, the thing is, we are selling the same inventory all the time, right? We are selling the same inventory all the time. The business that we do here never changes. It's always the same. That's what people don't realize, right? Now they're going to try and sell it between 95 and 97. If we catch some bids, we're watching 97 to see if we can pop that and go tickle 6,800. So 5 years ago we were selling contracts. Now we're selling contracts. This morning we're selling contracts. This afternoon we're selling contracts. The business never changes. It's not like you're running a beauty salon in the morning and a hot dog shop in the afternoon and a tire recycling place at night. It's the same business. That's why the levels work. Looking to see if 96 3/4 has any reaction. See how they're selling into it at the stop? It might. We'll see. Right? That 95 level might become support. If it does, that's a clue. Great observation, Moran. Yep. I'm seeing the same thing as yes. If price moves higher on lower volume, uh, it means they're tightening. See, there's always sellers, right, Jiraj? Look at how much volume was traded under 97 yesterday and today. So if all of a sudden the market starts moving higher, it means the sellers have seen bids, right? It's like you guys have 50 pairs of shoes or 100 pairs of shoes. You had to buy maybe 1,000 pairs of shoes, but then you look out and you see 20,000 people lining up to buy those 1,000 pairs of shoes. Get what I'm saying? So they'll creep it on low volume and they'll try and sell as much as they can at a higher price. But right now we got a seller at 96 3/4, so we ain't going anywhere for now. We might just take, right? No, don't. No. It's not really short because look where the close is. Inventory overnight is actually long. Okay? But if we can't if we can't pop the 97s, they will sell it between 95 and 96. You could see, look here, Josh, look. This is what we're selling here now. Right? I know you're looking for that big move up, but remember what I said an hour ago. Everybody got clipped on the way down, right? This thing's bleeding inventory. So at nighttime, they might be able to run it up and lose some. But be careful of those sell orders when they come in when people wake up. That's all I'm saying, right? Good. Yeah, inventory corrected early. Now you see the sellers moved down from 96 3/4 to here, right? The candles are getting really small. Eventually, if we run out of buyers, we're going to have to put it on sale under 94 and a half, right? So 93 is the bottom of these two candles. That's where that bid was. That's the very similar thing to this, right? The bid started to move up. If we hold 95, like Murad said, the positions underneath us, if we could con enough suckers to come in and go stable here, then we can get a bit of a move up. But is this worth putting money into? Not for me. Not at $500 for a micro and $5,000 for a mini. No reason for me to trade it. How are you going to make any money? So when you see this kind of business taking place, the chart is a representation of the business that's transacting, right? So you can visually see, I don't want to short it. I don't want to long it. I'll just wait till these fools figure it out. And I'll wait for a nice look below and fail or a nice look above and fail. Wait for some more people to come into the market, maybe trade after the CPI, thing. Here we go. Got a 97 print, okay? That should start triggering. See, there's a stop run. You see 24 contracts, 5, 6 contracts, 7, 8, 12. It is creeping up, right? It is creeping up. And these algorithms are very, very sophisticated. So they sense the order flow and then they react, right? And they move the bid and offer, right? Much faster than a human being can do it. Right? Remember, algorithms don't run the market. Well, maybe they will very soon with AI. But what they do is they execute the business plan and they allow for very efficient execution of a business plan. And what's a business plan in a market? Buy some cheap crap and sell it at a higher price. That's it. Okay, there's our overnight high. Let's see. So this is a look above and fail of 96 3/4. If you're short 96, 95, put some bids at 94, 93 and a half, and 92 and a half, and see if you can get a fill. If we pop back up over 95, govern yourselves accordingly. Cool. Down to 92. Look above it, fail. So the gentleman was asking about the types of trades we take. And I didn't take this trade, but you look above and fail. So you short 96. You put your stop here at 97. Cover, cover, cover. And all the way down to this. Remember where that bid was that Moran found earlier at 90, right? There you go. One decent trade. We knew there was going to be sellers, right, Jiraj? Right? You knew that there was going to be a seller at 97. There's a lot of supply above us, right? There you go. Look, your setup worked. Well done, AZS. Well done. Right? You hit that you saw a seller, right? There was a seller at 96 and 3/4. They lowered their offer here. It looked above 96 and 3/4. There's your signal, and there's the fail. Look what also you get. You get a nice little gap here between the candles. So there was no bid there. That's why the market just went straight through it. Beautiful. And right back down to the point of control. Let's see if that 67.90 bid is there. See how gappy it is? Within the candles, there's spaces. That means that there was no order to get filled at the time. Let's see if they backfill it on the upside. Yeah, always look to the left. There's that 67.90. Bid's not there anymore, Moran. Let's see if it does a look below and fail of 90. Otherwise, your target on the rotation is look above and fail of 96. Rotation, the target is 87 and 3/4. Right? The look below and fail is up. The look above and fail is down. Right? And you're shorting the backside of the move once the seller has proved that they exist. Right? Once you see a seller, you can short and sell alongside the seller. When the seller stops selling, that's when you cover your short. If you want to learn how to short a market properly, we'll teach you at the Trading Syndicate, right? No stupid indicators, no stupid RSI, none of that crap, right? You find a seller, you sell alongside the seller. When the seller stops selling, you cover. That's how traders have traded for thousands of years. It is a part of the business. You shouldn't short a market unless you see a seller. If you don't know how to see a seller, what you want to do is you want to learn how to go long so you become a seller. Once you become a seller, you'll be able to spot competition. This makes you a much better short seller. Okay? Takes one to know one. You guys remember that saying? Takes one to know one. Once you become a seller, you will understand when other sellers are competing with you. Why? Because you'll be sitting there like an idiot with nobody buying your product, wondering what the hell's going on. Well, somebody's selling it cheaper than you. Then you snap out of it and lower price. Now, once you understand that behavior, you become a much better short seller because then you can recognize competition. AZS, I have no idea. Did you have a lot of coffee, brother? Okay. All right, just checking. You might be all hopped up on those Monster Energy drinks. I'm just joking. It's okay. Keep posting the charts. You've posted about 30 charts in 20 seconds. I was like, look at this, and look at this, and look at this, and look at this. Hey, just, do me a favor and send me what brand of coffee you're drinking, okay? All right, folks. because I'd eat some of that stuff. Good work, AZS. Get you some. Nice work. Well done. Yeah, my coffee did not work this morning. Oh. Oh. So, okay, I'll leave you guys now. Remember, I am staying in town this year for the first time, so I will be available over the Christmas holidays. If you guys want to do some coaching stuff, let me know. And people who are interested in mentoring, reach out to me at the Trading Syndicate because if I can do some work, I can stay inside and then I won't have to go out on these like 7 mile hikes with my girlfriend. I can say, oh, I gotta work. Your grandson is imitating me? Oh, God. That's hilarious and kind of scary. Hey, sir, welcome to the room. Good to have you with us. Hey, Cisco, aloha. You gonna do Christmas on the beach? Man, I miss living in Hawaii. Christmas on the beach. Christmas Day on the beach was the best. All right, folks. Have a good morning. Stay out of trouble. Jerry, let's talk later. Let's do a phone call when you have time. All right, everyone. Thank you. Bye for now. We'll see you at 9 o'clock Eastern Time, 2 p.m. UK time. Bye for now.